Well, markets drifting into the red. The S&P down about 0.3%. Let's take a look at the S&P sector heat map. Materials and energy in the lead. Earnings season kicking off on Wednesdays. We've talked about with J.P. Morgan reporting results. Joining us now with what to expect is Paul Hickey from Bespoke Investment Group. Paul, it's always an interesting read to see what these early reporters have to say, and I can't imagine that there's going to be anything top of the list when it comes to topics more than maybe labor and supply chain disruptions for across industries. Maybe not so much for J.P. Morgan, but what should we expect here for the big themes?
Yeah, so I mean, I think you've got it exactly right, Courtney. We're going to see every company reporting, except maybe some of these financials, talking about supply chain disruptions, labor shortages, and inflationary pressures. So that's well known at this point. And I think if we were heading into an earnings season where earnings expectations and earnings were expected to rise 7% over last quarter, that would be a big concern. But right now we're looking at earnings expected to fall 7% versus last quarter. So I think some of it's priced in here. And when you head into the earnings season, we view it all as an expectations game. You know, if you're a C student and you get a B, you're happy. Whereas if you're an A student and you get a B, you're unhappy. And so, well, as we've seen earnings revisions lowered heading into this earnings season, analyst revisions are some of the weakest we've seen in the last 5 quarters. So heading into the last 5 earnings seasons, we had very strong upward trends in revisions. This quarter, we're seeing much weaker trends in earnings where positive and negative revisions are about in line with each other.
So would you say then, Paul, the sentiment is looking more negative, or is this just set up for low expectations to have some easier beats?
I think we are in a situation where expectations are more muted than prior quarters. I wouldn't say they're outright negative at this point, but they're at levels which are a lot more manageable than expecting real strong growth ahead. So I think you could see a situation where even the market as a whole is pulled back heading into this earnings season. So we've seen some of this reflected in the fact that expectations have come in a little bit. And I think that does set the bar a little bit lower here and makes it easier to beat for companies as they report and we get into this. Again, who doesn't know about supply chain disruptions, inflationary pressures at this point? And so we're going to hear about that, but most people are well aware of that fact.